So you guys already know the difference here. So average tax rate and marginal tax rate are not interchangeable. They're very different. Average is the percentage that a taxpayer pays in a given certain in tax, given a certain amount of taxable income. Marginal is the proportion of tax that they pay on the last dollar, the percentage of tax they pay on the last dollar of income. So, for example, here we've got Ben and Martha. They have income of $49,975. Their marginal tax bracket or marginal tax rate is 12%. Because the last dollar that they earn, $49,975, is going to be taxed at 12%. But not all of their income is taxed at 12%. Some of their income is taxed at 10%. So again, first thing you have to do, figure out what the tax liability is. You got to do that by using those tables, right? So you figure out that tax liability, then take the tax liability and divide it by the taxable income. And this is how we get our average tax rate. Okay? Questions? Do we know the difference? So what's the difference between marginal and average? Somebody explain to me the difference. What's marginal tax bracket? Or tax
Marginal tax bracket will be on your last dollar or next dollar, and the average is your tax liability over the taxable income.
Exactly. Thank you. Okay? All right. So when somebody says to you, oh my gosh, I'm taxed at like 24%, you know, well, not all of your income is taxed at 24%, only that the part that's in that bracket is taxed at 24%, right? It's going to be your total, your average tax, which is what most people think of, is, oh, if you say you're in the 24% bracket, most American taxpayers would think all of your income is being taxed at 24%. That is not the case. Only the amount that's in that last bracket is the amount that's taxed at 24%. All right.